Good morning, traders. I apologize for not posting a video lately. Uh, my father has some serious medical issues, cancer related, and so I'm spending a lot of time at home and at the hospital and stuff. And trading where I can. So let's get into what I'm seeing in the charts. I think we're about to start seeing some upside movement in the dollar index. Uh, so just keep this in mind that what looks like we're starting to break above this descending midline, 50% fib line. So that turns the dollar index to the bullish stage. It looks like we're going to be starting our week breaking out to the upside on the down from the downtrend, and we're breaking out of this consolidation zone we've been in since way back in May. So keep that in mind. I see some dollar strength coming into the markets. Then also, if you look at your bonds here, you see how we closed Friday, and that's almost an inside shooting star candle for Friday on our bonds. So I do not see much strength in the bonds coming into the next couple weeks. So keep that in mind. And we have not even tagged my first line in the sand for a potential bottom in the bond market. And if that's the case, that's probably going to put selling pressure into the markets. So just keep that in mind that I do think bonds have pressure all the way up to the probably the end of October, 1st of November. We're going to have selling pressure in the bond markets. So be careful on the long side in the markets the next couple weeks, in my opinion. Uh, the one set index that I think we have to see turn the corner for this market to finally get some legs underneath of it, and that's your IWM, your small caps. And remember, they led the market up, they're going to lead the market down. So to see some responsive buying into the small caps would mean that we might have finally put a bottom in. And I'm still targeting the 150 area down here for IWM for a potential bottom situation. Right here, right now, there is just way too much risk in trying to call a bottom in the markets here. There is a intermediate fib fan zone that we found a little bit of buying pressure there Friday, but all told, I went through all my charts and I was not impressed with the little bounce we had Friday. So be extremely careful on the long side. I don't think the downside is over, and we're going to probably have quite a bit of down pressure this week, at least mid-week, and maybe rebound at the end of the week. Some things to look out for. We have turned intermediate bearish on the banking index, and we have broken down from the consolidation range. It started back in November of 2017. So keep that in mind. We are right now back testing the breakout on extremely strong volume last week. So if this doesn't hold, we're probably putting in a head and shoulders pattern in our banking index. And that's exactly what I'm thinking we're doing here. I think the higher interest rates with the flattening yield curve, they are starting to unload the banking sector. And the Fed talk, actually, the timing of this is quite amazing. They're having multiple Fed heads coming out talking about they feel really comfortable about raising interest rates. And they're doing this right on the eve of the midterm elections. And I firmly believe this is a political gambit to get the Democrats into the midterm support into the midterm elections. And if they can drive the markets down enough that they could actually pick up votes into the midterms. So I know the Fed's not supposed to be political, but the timing of this right before the midterm elections is quite suspect. Okay. And but yeah, I do think we got a head and shoulders pattern setting up here in the banking index. And JP Morgan, which in my opinion is the darling of the banking sector, they had decent earnings, but they just completely dumped it Friday. So that's a tell that there is significant selling pressure potentially in the banking index. Bank of America, that one there, so far it's holding this upward distribution for 2008. Uh, Given the relative weakness and stuff in the banking index and stuff, we are in the bearish phase of this uptrend. So I'm still leaning to the downside that they're going to sell the news on Bank of America, and the earnings come out Monday morning. So keep that in mind. We do have an earnings event which could exacerbate the selling pressure in the financials. And then Goldman Sachs, they report earnings Tuesday morning. Tuesday morning, I'm pretty sure. And we do have like a little mini head and shoulders going on here on Goldman Sachs. And we are right down here at the range lows on the Goldman Sachs going into this earnings report. And we are on the bearish side of the long-term trend. So that's more than a couple reasons to be a little concerned about trying to push longs into this earnings event season. J&J, they report Tuesday, and this is a value trade. It's been running up into earnings. I'm afraid this is going to be a value trap, and we're going to break down the the intermediate term trend here. And my reasoning for it is the dollar strength. This whole quarter, the dollar has gained ground. So if that's the case, so the exchange rates are going to be exceptionally difficult for J&J to make money with a stronger dollar. So yeah, this intermediate term, at the very least, trend, I think, is in jeopardy for their earnings coming out Tuesday. Well, I could be dead wrong about this, but Netflix is one of my favorite shorts coming into this earnings season. And this company continues to lose money. And don't get me wrong, I use Netflix, but I am not impressed with the content at one bit. You know, that latest Marvel's Iron Fist, it was so bad that they canceled the whole series. And that was the first Marvels that I actually completely was upset with. And so, you know, them canceling that series right before the earnings come out, that says something that, you know, there might be something going on here. And the biggest problem I got with the management is that they're spending all this money on content for their core platform, and they're not even thinking outside the box about expanding their core platform. You know, and I've had to discuss this discussion with other people several times. You know, I think they should have an adult programming network platform, you know, like Playboy and stuff like that. But adult programming, completely differentiated from their own. That's just one idea of many. Possibly a sports platform where you can get global sporting events right on Netflix streamed live, you know, anywhere in the world. You know. And I'm sure that will be quite popular, or you know, and quite possibly even a news network or a news platform. But instead of just having one Netflix, they should have multiple platforms, in my opinion. And then the one Netflix that they do have, they should have different pricing plans instead of just one flat pricing plan for the entire Netflix platform. I mean, this is so crazy that they continue to make money. They don't care about it because the price keeps going up. And one of these days they're going to wake up. And it was just announced this past week that Costco is actually trying to go into the streaming business. And that's just the latest in a long line of businesses all trying to enter into this space, each of which is going to put competition against Netflix. So that's it for me on Netflix. But yeah, as far as the trends go, we've on the short term, intermediate, and long term. Short term, intermediate, we are on the bearish side of the trend, and then the long term, we're still barely holding the Well, we're still holding the primary uptrend on the long term. So just keep that in mind. I am not bullish on Netflix if you haven't figured it out. IBM had good earnings, good guidance. So I do think the earnings are probably going to be the revenue side will probably be good. The earnings per share might be hard because the stronger dollar. They get a lot of international business. So just keep that in mind on IBM because of their international exposure. Now we're seeing some intense pressure, selling pressure on the transports. We gave up the 2018 Open, and now we're back testing the 2007 Open on our airline stocks. So far, the intermediate trend is up, and the long-term trend is still bullish. So far, our airlines are holding up okay, but we do have. So they've been selling the news on the airlines. Spirit Airlines came out and it bucked a trend last week. They had some really good earnings results. So we do have Delta coming out Wednesday. Now, some things to worry about with Delta. We've had all the airline cancellations because of the hurricanes. So I could see a hurricane impact on the airlines. And then also fuel cost. Two things to worry about. The higher fuel costs this past quarter. And just keep that in mind that Delta Airlines are probably coming, not likely that they're going to beat real big, but they might probably come in line on their earnings numbers. Alcoa reports Wednesday. We got a breakdown pattern happening. What's going on with the autos is having a serious impact on our aluminum demand on Alcoa. Now, Boeing is very strong. It's a very strong chart pattern. So this is one area that they might have it wrong, is the Alcoa. Alcoa and the steel companies, they're battling a inventory buildup that happened before the tariffs hit. So that's why I'm thinking they're probably going to miss this earnings season because of the lower demand that we've seen in the past week or so, plus the inventory buildup before the tariffs hit. PayPal reports Thursday. This one here, I can't really give you any bias on it. It's an amazingly strong stock, and the consumer is reportedly very strong here. So, like I said, I can't really give you much of an idea on this. The multiples are extremely high on PayPal, so if the markets were weak, I could see them selling the news because of the high valuations on PayPal. Honeywell reports Friday. Like I said, the IMF lowered the global forecast for growth last week. And that tells me Honeywell is a global company. They get quite a bit of business out of China, and China is just imploding. So just keep this in mind. We have a double top in here, and it's rejected hard both times at these levels. So very easy, very good chance that Honeywell's probably going to sell on the news if the global markets are as weak as I think. And Honeywell's also got a lot of currency exposure. So that's another thing to keep in mind. And then I'm going to finally stop with U.S. oil. I think over the next couple weeks, we're going to see a lot of downside risk in the oil market. And the reasoning for that, I think the dollar is about to break out to higher highs. And I think all the hype about Iranian oil coming off the markets is already priced into the markets. And if anything, they've overpriced it into the markets because we've had record output on fracking out of China last week. And then we had Saudi Arabia and Russia both come out, and they on their very first conference or report, they're already going to take up half of the loss in supply. And but I talked to some other chartists, and they just seem to think about 69 as far as it's going to go. And I see a heck of a lot more risk all the way down to the 65 area over the next couple weeks. I think they are really going to have some selling pressure in the crude space. And when they start selling, they're going to sell it hard. So just keep that in mind. And I want to finish it with one last earnings play for Friday. That's Schlumberger, and they're in the oil services space along with Halliburton. And these stocks have just gotten destroyed because they have a lot of international exposure, and the internationals are not doing very well right now. So just keep that in mind. We at a closing low below the 2016 low as of Friday, going into earnings next week. So lots of selling pressure in the oil services sector, and maybe this is overblown. I don't know, but it's something to keep on watch. Okay, and like I said, if the oil sells off, that's just going to exacerbate things, in my opinion. But yeah, we're right down here at range lows going into earnings. So be extremely careful. That's just some of my ideas. If you haven't noticed, I've got a bearish lean on the markets, and I didn't even go into the main indices talking about them. So I hopefully I'm right, and the markets have some selling pressure this week, and we can also make some money together. Thanks a lot, and good trading.